2009 financial crisis, discounted cash flow method, and then only 8% growth of earnings. How are you doing, guys? With many news coming from all around the world, we can expect high volatility on stock markets. It is important to control your emotions and be rational. Warren Buffett said that to be successful in investing, you should go against the crowd.
Be fearful when others are greedy, and greedy when others are fearful. And smash the like button.
Yeah, I'm sure he said it too. Trust me. The US stock market dropped more than 20% in less than a month. It is the most shocking correction since the 2008-2009 financial crisis. I do not know how big the crash will be or how long it will last, but remember that the business earnings is what will drive your investment returns over the long term. Nothing else. The current crash is the perfect example of it. It shows that earnings are what to invest in, not stocks going up or down. Today I will show you the calculation of the discounted cash flow method, the method which will provide you with a more rational view of the current situation. We can see so much panic all around the world. People behave as the world is ending. Unfortunately, their behavior also reflects the stock market. People make a mistake and sell low instead of buying low. I will show you why the long-term investor should be happy with such a situation. Let me explain. I was such a panic investor some time ago. I was happy when my stocks were going up and I was selling when it was high. But now I think more about underlying businesses, not just stock tickers. You should know what the company does and how they make money, not just follow the stock price chart. For most of my companies, their underlying business is not going to suffer much from restrictions on people's traveling. If you are a long-term investor, such a panic selling on the stock market allows you to build your wealth over time and buy the same great businesses cheaper. You should think where the company is going to be in 5, 10 or 20 years from now. My three most significant positions lost on average 10.5% this year. But you have to know that these companies returned me on average plus 57.9% in 2019. One thing is a panic, which often does not make any sense in terms of the company's valuation. Let's think about how the valuation of my companies changed because of the current situation. I will show you the calculation of Facebook intrinsic value in a few scenarios. Half the expected earnings in 2020, then no earnings in the whole 2020, and no earnings in 2020 and 2021. P/E ratios are shortcuts to calculating future discounted cash flows, and it is particularly misleading to use current year estimates if there is a one-time event involved. The intrinsic value of a business is the discounted present value of all future cash flows. So let's see the calculation for the Facebook company. So first, let's look at the basic example with the current assumptions about earnings. Then we will look at the more severe scenarios and assumptions about earnings. I took to the calculation the current predictions of analysts about the Facebook company earnings. I set the growth of earnings like here. First 5 years, 20%, then 3 years with the growth of 10%, and then only 8% growth of earnings. The assumptions do not matter too much for the result, and I'm going to show you that. Also, if you want to receive this spreadsheet and play with it, I will add the link below the video to download the spreadsheet. You can change the assumptions about the growth or the discount rate. Also, you can test more severe scenarios than I'm going to show you. I set the discount rate to 10%. In simple words, the discount rate is the percentage of return you seek as an investor. For example, if you invest $100 today and you expect to earn $10 in 12 months from this investment, your discount rate is 10%. The discount rate is the return you earn as an investor to compensate for the risk you take when you invest money. So the base scenario gives us the intrinsic value of the Facebook business of $311.87 per share. You can have different assumptions for growth. You can download this spreadsheet and tweak it as you wish to check what the value for Facebook looks like when you put your assumptions. And then let's see what changes if we assume that in 2020 Facebook makes half the money we expected previously. I call this scenario a mild reduction in earnings scenario, which can be caused by the slowdown in the economy. So we leave all other fields the same, we will just change the expected earnings for 2020. We can see that the intrinsic value changed from $311.87 to $307.75. So if the current situation and slowdown in the economy reduce earnings for Facebook by half, it means the whole company is worth 1.3% less.
What if we assume that the whole year 2020 the Facebook company doesn't make any money? That should do much harm to Facebook value, right?
Yes, it would. It would reduce the current value of the whole business by 2.6%.
Okay, Damien, what if Facebook loses its profits for the first 2 years?
Okay, I will check it for you. It should reduce the intrinsic value of the Facebook business by 5.5%. It all shows how irrational is the behavior of the investors now. Don't be like them and think about businesses. So what gives me an optimistic perspective despite the gloom all around us? In China, there is already more than 80% recovered from the coronavirus. The majority of businesses are back in work. Apple has reopened all 42 of its branded retail stores in China as of Friday. The stores had all shuttered in early February as China restricted travel in an attempt to slow the coronavirus outbreak. However, they have been gradually reopening over the past few weeks. Also, there is positive news about factories. More than 6 weeks after China's leaders shut down the world's second largest economy, factories are reopening and offices are starting to fill. My portfolio consists of mainly internet companies. The current situation should not affect their business massively. Also, these companies are in a great financial position with no debt and plenty of cash on their balance sheets. The current sell-off on the stock market created the opportunity for them to buy back shares or acquire discounted other companies which may struggle because of the restrictions caused by the attempts to slow down the spread of the virus. Another argument why I am calm is that with people staying indoors while being afraid to get a disease, they will spend more time online or playing games. The profits of my companies may be going up instead of being reduced. People will play more games, watch more YouTube, use more Facebook. Similarly, companies will push into more working from home, which will benefit companies like Google with its productivity tools and Google Cloud offer. So to be honest, I am well prepared for this correction. I am going to buy more shares of great businesses, which will make me rich over time. When you panic, you do not make rational decisions. I know that there are people who were afraid to buy for the last 11 years. They have been hesitant to invest since the crash in 2008. If they bought at the bottom and invest in just simple tracker for the S&P 500 index, they would be up more than 300% during these 11 years. And that result includes the recent correction or the bear market. Definition of the bear market is the decline in stock prices of the respective stock market of at least 20%. In the next video, I will show you how my stocks have been doing during this recent panic, and I will tell you why I am very calm about the stock market crash with my holdings. And if you want to download the spreadsheet with the calculation of the expected cash flows for Facebook, click the link in the video description. You can hear much noise recently, but one fact remains indisputable. Stocks you buy today at a 15% discount from their peak will be 15% more profitable for you over your lifetime. Let me know what are you planning. Do you have any money allocated in the shares of these companies? Did you sell your stocks because of the fear for the spread of the virus? If you enjoyed this video, make sure to subscribe to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!